What's going on, guys? Today is Wednesday, September 30th. We're going to do a quick trade review on Walmart. Okay, this is Patrick here trading with Prime. Let's get straight into it. So, a few days ago, we were posting on the social media and also the alerts on the Discord. By the way, if you guys are not in the Discord, if you'd like to join it, the link is in the description. Also, check out rtbtrading.com. And if you're getting value out of this video, sure and hit the like button. Subscribe if you're new. We go live Sundays, 5 p.m. Pacific Standard Time, so we can help you guys with anything you need help with and go over trades for the week. Now, diving into it here, what we're looking at for Walmart is it's been ever since the March lows. We saw a lot of strength in Walmart. We keep seeing these pop up higher, sells off, pops up higher, trade sideways, pop up higher, sells off. I would have to kind of argue against this idea that it's selling off. I know that some of these are down. If I just select this high down to here, that's down 10% into correction territory. Something to keep in mind though is this chart keeps doing the same thing over and over again. And one day we will wake up and that will be over. But until that actually happens, what we're going to do is we're going to just keep trading it the way that we see fit. And so this is what I was talking about: up, consolidation, one last move up, and here we have the consolidation. So what we're looking at for the last few days, well, first, let's go ahead and go over to the trades, and let me scroll down here for you. So follow my cursor if you guys can here. Starting off with the September 28th. Purchased one contract at $1.33, which is equivalent to $133. The next day, or same day, again, 132. Same day again, 132. Each of these combining would give you a total. And then one last contract on the 28th, again, $1.36, which would be $136. And then coming into the, let's see here, or actually going one more contract for the 28th, $1.38, which is equivalent to $138. I then sold 3 of the contracts. That's the thing with some of these trades is that you don't always know what the market is going to do. And so sometimes it might give you a jolt reaction to, and we'll go over the chart here in a second so I can kind of show you, but sometimes you want to limit risk, especially if you're going to hold overnight. So the way I viewed this is I don't want to carry the risk overnight. So I sold 3 contracts at $1.27, a little bit of a loss, closing out at 381 on that. And then coming into the 29th, later on that day, purchased 2 contracts at $1.29. And then purchased on the 29th again, another 2 contracts at $1.36. 29th again, 4 contracts bought at $1.39. So going over to the other chart here. So here's the actual contract itself. And as you can see here, it doesn't always work this way. And so, in my opinion, it's about the trading, really focusing on the trading. So we're looking at $880 for the day. Total return is $822.50. That is plus 55%. Now, I could have held this overnight again, but as far as I'm concerned, that's plenty profit. No need to get greedy. I want this to be a long-term thing. I don't want to lose back or give back some of the money that I've made. And so what we're looking at today is, we're looking at 5 contracts at $2.06 to the sell side. So that'd be $1,000 to sell it. And then another 4 contracts sold for $618. And then another 2 contracts finally sold for, or 3 contracts finally sold for $594. And so that was the total was $850. So let me go back to the chart here and show you what I was looking at. And this is the thing is I want people to learn. And on one of the social media posts we did, somebody made a comment about they have a hard time with Walmart because they seem to lose the trade and then the trade goes against them and then they sell their position and then, it rockets the next day. That is what trading is all about. It is timing these things just right. If you can, you don't always time them right. And really you have to know at what price you are going to be wrong. You can't just hold these things forever. If you guys notice, it took me about 2 days around 2 days to accumulate these contracts. And so I'm going to zoom in just a little bit here for you and really blow this up on your screen so you can see what I was into here. So as you can see on the screen, if I put a line across the screen, let's say right here, you see that how Walmart, it did find support here. So I didn't enter it. I didn't try to catch the falling knife. I let it find support. It rallied away. It pulled back. It found support. And then you notice this. I'm going to put this in a different color here for you guys. You see this price action that goes up like this, and then it just trades sideways for 3 days. These last 2 days of the 3 days was the accumulation process. And in my viewpoint, the way that this chart is trading is see how it's curling like this, and just follow my cursor here. It's curling. When charts curl like this, usually, if you imagine this for a moment, if price is falling out of the sky, and then it starts to curl, let's say it's falling down, it starts to curl, it's gonna want to more and more buyers are stepping in, more and more sellers are leaving the position. And to be honest with you, anyone who was short against these highs right here probably got stopped out, creating more of a short squeeze today. Now, the same thing is true when price rockets up. When price shoots way up high, like take a look at the S&P 500, or really any stock, any index. When price starts to curl over like this, and you start to see it head down, this curling effect isn't always bullish. I would say a lot of the times this curling effect is a chart over a longer period of time. It's getting ready to roll over. And then next thing you know, you start to see these big candle type sell-offs. That's kind of one way to look at a topping market. Well, the same thing is true for when the market is pulling back. When a market is pulling back, the same thing happens. It curls like this. We saw the same thing in AMD a couple days ago, where we were looking at this curling action. Now, the thing is we did see this shoot up here, and then we saw it trading sideways. It is extremely hard to trade to the north or to the south out of a bull flag / bear flag. It's extremely hard to do. You can either wait for the breakout or wait for the breakdown, or what I did is I just accumulated across several days. In fact, if you had contracts that were out further and not just expiring on the 16th, you could have been accumulating this thing as it came down here. You could have been accumulating it. The problem with that is that you're going to pay a lot of money to hold those contracts. You're going to pay in what's called theta. You're going to hold those contracts for a little bit of time, and you're going to pay each day for them. And then when all is said and done, to be honest with you, the price could have shot below, whipping traders out of the trade, and then rocketed. But hindsight is always 20/20. It's easier said than done when you're looking back at the chart. Let me go to an hourly time frame and dive down here, so you can really see this curling kind of action here. You can kind of see price rocket up here. It consolidates. Each time it goes higher, it consolidates higher, and then it starts to really pull back here. Now, to be honest with you, I could have stayed in this trade. I started, just like when you accumulate, I also like to release the contracts like an accumulation, but on the outside of it, I like to let go of the contracts over a period of a couple hours to see what kind of strength I can get out of these contracts. And this is the thing, is you have a lot higher IV that usually comes in, especially when it starts to rocket. But then again, the same is true. Sometimes it won't. Sometimes you'll actually get lower IV when it rockets. It doesn't always mean that you're going to get better IV or implied volatility. You might not get as good of IV as maybe when it sells off. Sometimes you get better implied volatility. But that's the thing, and that's why I like this accumulation process. So just for the future purpose, though, if you ever see a chart do this, keep that in mind, that it is possible you see a solid support down here. So in this trade, for my trading plan on this trade itself, my stop loss is somewhere down here at 135, because to be honest with you, it could pull back here. But as you see on the lower time frames, even the hourly chart, it's making higher highs and higher lows, higher highs, higher lows. It put in an hourly reversal candle, and this candle up here, the following candle, when it started selling off, is when I let go the last few contracts. I didn't want to hold them, especially with this hourly reversal. If I want to get back in, sure, maybe tomorrow the price will be dropped down a little bit more. Maybe it'll come down to 138. Maybe it'll even come all the way down here to 137.43. You never really know what price is going to do, where it's going to go. And that's the thing, is we don't have to predict the market. We don't have to map it out and say, okay, in 3 days from now, I expect Walmart to be at 151. Trying to predict the market is, in my opinion, the hardest thing. And most times, most traders are wrong about that. In fact, anytime I've ever tried to predict the market, I've been wrong about it more than I've been right. So that's definitely something to keep in mind. Trade what we can get. You know, when we see a solid support area down here, I'm going to start accumulating contracts with enough time on the contracts where they're not going to cost me too much money to hold them overnight, if that makes sense. I think it wraps it up for this video. Again, we'll see you guys Sunday, 5 p.m. Pacific Standard Time. If you have any questions about this trade or any other trade that we do, Also on Discord, if you guys have any questions about any of the trades that we take, any of the alerts, any of the contracts, any stocks that you guys are watching, come check us out. Ask the questions, get the answers Sunday 5 p.m. See you guys in the next video.